For those of you who've been following along, you know 210 Holding Group recently purchased our first property. We call it Pilgrim. And you've seen some of the videos as Dan is working through the rehab of that property. What I wanted to do was to go back in time a little bit and just show you how we found the deal and show you some of the tools we used to analyze it to come to the decision point that we needed to go out and purchase that property. So this is an email that we received from our wholesaler. We're on a list and we receive properties daily. And one of my roles at 210 Holding Group is to sift through all these deals that come in and analyze them to determine whether or not we want to go forward. So this particular one, you see the address here for Pilgrim, 4-bedroom, 2-bath at $115,000. I had actually seen this property about 2 weeks prior at $135,000. So when I saw this come back again, I was very interested. So let's go into the project analysis packet. And we'll open this up, make it a little bit bigger. And so as you scroll through this, you're going to have, key information on the property. You're going to have tax information. This will be important later as we try to figure out the numbers. But the biggest thing is the comparative market analysis that you see here. And so the wholesaler has given you 3 properties that give you a range of, hey, if you fix this property up, it should be worth anywhere from $200,000 to $210,000. That's probably going to be a little bit more aggressive. They're trying to tell you the potential value you have in this property, but that's not likely to be the case. So we need to go do our own comparative market analysis. But before we do that, I'll just also show you they also provide you the properties that they utilize. They give you some pictures so you can kind of understand the finishes, understand what the property has to offer, so that when you create your rehab budget to get to the prices that they're showing, you have an idea of what the competition was. So let's go to the Fast CMA tool from Real Estate IQ. I used to do CMAs through Zillow and spent hours looking at sold properties to try to figure it out, and it just took too long. So this property or this tool really sped up the process. The market in San Antonio is just so hot. You have to be fast and you have to come to decisions quickly about whether a deal is good or not. And this tool has really helped us out. So we'll open up the CMA. And so what you see here is this has given me a new comparative market analysis. It's told me the sold value, sold CMAs of properties that are similar are at 195,000, and they were actually at 192,000 when we ran this a month ago to make the decision to go forward. Now let's take a look at a couple of these. This is a 4-1. It's a 4-2. This is a 3. This is a 3-2. Our property is a 4-2, so I don't want to use that one. Let's see, let's go back. I think I saw another 4-2 back here. Okay, so let's use this one. So, but you still come back to 195,000 as a CMA, so that's good. And this is a cool tool, cool part of this tool. You can quickly go through these pictures at really rapid speed to understand the finishes of these other properties that are comparable to your property. So again, this gives Dan and I an understanding of, hey, these are some of the finishes that we need to come up with or put into the rehab budget in order to make sure that our property can get the price that we're looking for it to get. All right, so with that, now we have an understanding that the property will be worth $195,000, and it's on sale right now for $115,000. let's figure out what our rehab is, and let's see what kind of returns we have. So I go over here to the Bigger Pockets website. If you are interested in real estate investing, the Bigger Pockets website is absolutely the first place that you should go in order to gain education. There's forums, so that you can get with other real estate investors who have a lot of knowledge, who have gone through what you're going through, and can give you a lot of answers to your questions. There's education, books, webinars, um, blogs, and the Bigger Pockets podcast, real estate podcast, is definitely a fantastic way to really get started. So let's go under the tools, and we're going to go to the BRRRR calculator, because that's what we're doing here. We're buying a property, we're rehabbing it, then we're going to rent it out, we're going to refinance, hopefully get all our money back out, and then repeat the process, utilize that money, and see if we can go buy another property. So we'll take a look at the report that I did for the property Pilgrim. So you see you have the basic data, the property address information. You see we have the annual property taxes. When I actually ran this originally, I used the property tax information from Zillow, which was incorrect, which was much too low. So when I really originally ran these numbers, I got some great looking returns. In actuality, probably not as good as I had originally hoped or wanted, but definitely still something that we can work with. You look here, we've got the purchase price of $110,000, of which we actually got to. You have the $195,000 after repair value that we just saw with the Real Estate IQ Fast CMA tool. We had $5,000 in purchase costs, closing costs, and we have a $30,000 rehab budget for the property. We figure we're going to refinance this in about 6 months, and we are looking at about 3 months to do the rehab. So the refinance loan is going to be for $146,250. That is 75% of the $195,000 after repair value that we estimated. The interest rate, we just talked to our bank, Jefferson Bank, who we work with, and interest rates are in the high threes, and we'll put in a $2,000 closing cost estimate. Because we're actually doing this refinance under our LLC, you see that we use a 20-year amortization because of the fact that we're getting a commercial loan versus getting your standard 30-year mortgage. So let's hit next step and keep going forward. So when we originally looked at the CMA, we got a lease value of $1,450 from the Real Estate IQ tool. Let me show you this. I also like to use another tool, Rentometer. And if you look at that tool, let's see. And we'll go for 1.5 house duplex. Let's see what we got there. So you see there you get an average of 1682, median of 1600. And if I kind of dig into this a little bit further, you just have a very big spread. And when I look at all the properties here, the ones that probably are most applicable to ours is, this one, 3302 Nantucket at 1635, 1344 square feet, 4-bedroom, 2 bath house. So I'm going to go ahead and just split the difference here and use a 1550 as an estimate. This is going to be a freshly new rehab property. So we'll just plug that in as an estimate. We've got $90 in insurance a month. We've got our property taxes here. We don't have any other costs because the tenants will be paying that. We've put in a 5% vacancy estimate and a 5% repair and maintenance estimate. So basically, we'll be taking $7,750 a month and just kind of putting that aside in case there's vacancy, and we'll have $77.50 put aside for repairs and maintenance that may occur, you know, because we're doing a new rehab on this property, and a lot of the systems will be new or refurbished. We don't have to put a lot into planning for capital expenditures or repairs and maintenance. And the market in San Antonio is still going pretty well. We have a 3% growth rate. So let's calculate the results and see what we get. All right, so if you see here, this kind of gives you a high level overview of everything that's happened. We purchased it for $110,000, $5,000 closing costs. Here's a repair budget. So again, $145,000 total, and we've gained $50,000 in equity if we can get our property to an after repair value of $195,000. Let's come down here to the refinance again. This is the 75% of the $195,000, $2,000 in loan fees, 20-year loan, 3.75. In the end, we will only have $750 left in this deal. Again, because we had to put in $145,000 to purchase it initially, and to rehab it, we had to pay $2,000 in loan, so that's $147,000 total, and then we took out a loan for $146,250, so only left $750 in the deal. So we'll get $1,550 in rent on a monthly basis. You'll have expenses to include the vacancy and the repair money that we'll put aside, and so that'll leave you about $100 in cash flow. And so that's $750 that we put into the deal. We're going to make about 164% cash on cash return, meaning that essentially in a year's time we'll have gotten that $750 plus another $350 over the course of the year. So that's a really good return on the cash that we've had. We've gained $50,000 in equity, and we now have essentially all our cash back and are ready to move on to the next property. So that's a pretty good first deal. Don't know if it'll exactly work out that way. Don't know if we'll get $1,550 in rent or if it could be a little bit more, but being able to create $50,000 in value in a relatively short time is a bet we're willing to take.